Hi there, traders. This is Brad Gilbert with the FX Market Insight for Thursday, the 16th of April. All right, now for those traders in Asia, I'll just cover the Aussie data first. Now, we've just had the employment numbers out. I was expecting a massive spike. I mean, the poll was for employment to blow out to 5.5%. I was thinking well above 10%. In actual fact, I mean, it looks like the data hasn't been collected yet. The numbers came in much better than expected, right? So the currency, dropped yesterday a good cent. And that's going to slightly take the pressure off the Aussie going in through that Asian session. So if you're short, it's probably maybe a chance to take some dollars back. Now, while we're on this page, just having a look at the general impact here. If I can get my pen working. Having a look at the dollar index here, right? So we've seen a spike. Now, US retail sales figures, manufacturing data. Once again, if I just scroll the data up. The Bank of Canada did nothing with rates, but if you're looking at the general data itself, I actually didn't think these numbers were too bad. I mean, minus 8.7% in normal market conditions is a shocker. But when you look at the bottom end of the spectrum was around minus 24% expected, that's pretty bad. New York Fed Manufacturing Index, of course, all manufacturing sort of shut down, minus 78.2. That's hugely weak, right? So these weak numbers, what they end up doing is, if I just come up to those weak numbers, they end up pushing the dollar up back into that safe haven play, right? You've got the US equity market down 1.86%, but just when you thought, unlike early stages of the pandemic, where we used to see the dollar index really run, it stalled here at 100 and then retraced, about 70 points, and is now trading sideways. A lot of traders are being caught out on this, right? They were expecting, okay, as the dollar sort of took off, you get the mixed data. I know the data came in, pushed it down a bit. It's been a bit of a mayhem with the price action. And that's what you're going to expect during these events. Now, whilst I'm on this page, just looking at the major pairs, the dollar pair is going up, the other pair is going down. This is a sign of pretty good trading conditions, right? You can feel very comfortable knowing the US dollar is being consistent across the board. And that's actually a really good thing to have. Now, just looking at the general news now, okay, this is where articles start to pop up around, what's going on. Because there's no general fundamental news, as in the fundamental data. So what we've got is dollar stands tall as US retail slumps fans the flight to safety. That's obviously a key part. Then you've got there's some articles here, I think more opinion pieces about how growth's going to halt in Asia. Well, of course, that's a foregone conclusion. You got the Bank of Canada broadening quantitative easing. That sent dollar CAD through the roof. Despite that dollar weakness, the CAD has gone down significantly. So let's just have a look at the major currency pairs and try and isolate what the hell's going on here. Well, I mentioned this yesterday, and I can tell you, coming into that European session, okay, outside of any news in Asia, it has been very indicative of where momentum is going. Now, the Aussie was up here, was heading lower. Same for Kiwi. Kiwi had already sort of broken down, but you can see the moves continued. Dollar yen started moving higher. Euro was still above the trend line. It sort of crapped out, as did sterling, which was just through those levels. So to me, if you want to get a bit of an edge, get online just at the start of the European session and see where that momentum is building. All right, it's a key part to the trading opportunity. Dollar CAD had already broken high and was up around sort of 139.5 before the Bank of Canada. And you can see the impact there across the board. Now, if you've missed these moves, okay, don't think you can just run in and just get stuck in here. To me, Aussies are still a sell. It's probably a sell back up towards 64 the figure, right? Where Kiwi is already sort of completely capitulated. So you've got new resistance lines sort of forming there. If anything, you're looking at higher levels there to get into a trade, and because it's already left the building. So focusing on what you can see, dollar yen, obviously at a very critical level here, coming up towards resistance. We've got dollar strength. You might think that could be a good opportunity. Now, out of all the pairs, it looks like to me the Aussie and dollar yen seem to be the best ones. Obviously, you wouldn't be trading Aussie yen. Aussie sort of going down overall, even though we've got that short-term respite with the employment numbers. This is tricky. This is why you've got to follow the market every day, because the trade was yesterday on a lot of these pairs: Kiwi, Euro, Aussie, and Sterling. Dollar CAD, well, you could have got on the back end of that with the Bank of Canada. Dollar yen is probably the pair to be focusing on at this point. And the market seems a little bit caught up with regards, do we buy yen as a bit of a safe haven, or are we buying dollars because the dollar's back in vogue? So I think the dollar's going to run. I think you'll see dollar yen higher over the coming 24 hours. All right, just coming back to bring you back to the daily trade routine. Okay, just another mention there. If you're looking for some sort of expert online training, as in like, learn about different tactics and methods, jump on that Asia Pacific Online Trader Summit. It is on Saturday, this Saturday. Now, coming into the markets, well, the majors are still trading quite good technically with the active pairs here. Now, gold is going up. The overall trend is up. These are the pairs that have very clear direction. I still think you're going to be looking to buy gold on dips at this point. Dollar yen, well, the trend is down, but momentum is up at the moment on the back of the US data. So I'm potentially looking for a buy a break here above 107.80. Looks like to me a pretty good run. Dollar CAD, the other pairs here down the bottom, they've already left the building, right? Dollar CAD, oil. So if you're not long, short, or short these pairs already, you've missed it, right? That's the cold hard facts of it. The watch list pairs, the pairs that are sort of trading sideways, well, got a bunch of them here, which, I'd be looking to sell rallies on most of these pairs. And down the bottom there, the Dow, I tell you what, it's not running and it's catching a lot of traders out. It's a bit of a wait and see how things develop through the course of the week for the Dow. But that's it, guys. There's bits happening. Okay, this is like when you get through Wednesday, you come into Thursday's trading. When you're looking at the charts, if I just flick you back over there, what we've got is usually have clear direction, right? So much different to Monday, Tuesday. At the moment, the dollar is going up, Aussie, Kiwi, Euro, Sterling down, dollar CAD up. I mean, this one here is the only pair that hasn't really kicked in. It's going to be a chance for a top side, especially if we get some more weaker US dollar news. Now, as far as the fundamentals, as I said, the Aussie employment numbers just came out. The data to me is either incorrect or it hasn't been collected, or we haven't had enough time to get all the negative numbers. So just be aware some of these numbers are a little bit problematic. The initial jobless claims, I think, will be a key number for the equity markets today. Okay, once again, you see smaller numbers, you might see equities fall. We see really crap numbers. I think the US equities will rally because that should mean, further easing, further help from the Fed, from the government, from everyone. All right, and that's where we leave it for today. All right, guys, so plenty of opportunities. Make sure you keep an eye on all the pairs. If you do have Metastock, make sure you do check out the equity markets and follow the trail. We're trying to find the raw nerve in the market. Okay, US equities down. At the moment, we're seeing pretty neutral price action in sort of the yen crosses and the Swissy. You look at the Asian equities, though, they are starting to get a little bit beaten up, down 1.5%. In these markets, it's probably not a bad result. So we'll see how that plays out as we go forward as well. And the Nikkei correlating very closely there with dollar Swiss. So maybe keep an eye on that as you go through the day. Gold pretty much unchanged as we hit through the start of the session. That's it for me, guys. Have a good trade day. I hope that helps. Cheerio.